and you can't because my microphone's on. I've been talking to myself for the last 2 minutes. Good morning, good afternoon, good evening, wherever you are in the world, everyone. Welcome to our latest live webinar. It's Stuart here. We're going to do a quick run through, as usual, of the calendar this week and next week. Obviously, we're running into a key event on Friday. And then following Friday as well, and then we'll look at the charts you want to have a look at. So please feel free to put the things you want us to have a look at in the question box. Langer, can you now hear me? And my microphone wasn't switched on. Hope you can hear. Yeah, cool. Thank you very much, my friend. Anything you want to have a look at, please stick it in the question box, and we'll get to it as quickly as we can. So. All of you, let me see. Lassa, hello, good afternoon. Welcome to you as well, my friend. Captions. Chat. Hello, guys. Hope you are well. So is that coming out on the... Yes, it is. Okay. So let's get going. Let's run through the slides initially. Lost my slide chat. Right. As we say, that's our obviously got a couple of admin notes here. Trading is risky, ladies and gentlemen. Trading CFDs and Forex is particularly risky. Understand what you're doing. Understand about leverage and margin and the spread and all those other good things. If you've got any questions, please ask now, or ask privately if you don't want to ask. Nobody can see your question, so if you don't want it read out, I won't read it out, so don't worry about that. And we'll get on to the live markets in a minute. As Jamzo, we'll have a look at pound yen for you as well. So anything, guys, you want to have a look at, go to webinar, guys, stick it in the question box. If you're on YouTube or Facebook or LinkedIn or wherever you're coming to join us, stick it in the question box there. So that's my ugly mug. My mantra really is those two last words there. Know yourself. Trading is all about understanding yourself. It's a mindset it's a mind business. It's understanding yourself. It's understanding risk. It's managing your risk. And it's accepting losing trades. Many people can't do that or won't do that, and find it very, very difficult to get off first base, as our American friends say. You got to do that, unless you can't move forward. It's not about the charts and the patterns and the support and resistance. It really is about understanding yourself first and foremost. But more on that in our webinars next month, when we look at risk management in a lot of in-depth. So today we're just going to look at the calendar for this week and next week. Anything obviously you want to have a look at. We've already got pound yen from Abasanjo, and we'll take it from there. So busy week. We've got the key event, really, or the key events are happening on Friday. The big event for me personally is, it's actually not on there. How ironic is that? Is the price in the PCE? Let me just bring it in. This is the high impact events, but for some reason the PCE price index isn't deemed a high impact event. I disagree with that, but anyway, we got to the medium filters, and you can see the one I'm talking about. The one I'm talking about, the one I'm getting quite agitated about. This week is this. Actually, I was on the wrong week, wasn't I? So perhaps I'm doing it a disservice. No, I'm not. It's got it down here as a medium impact. This is the one I'm looking at. The core personal consumption expenditure. This one on Friday is the key event, and this year-on-year number 4.4%, and the month for February 0.4%. That's the key event for me this week. Yes, there's lots of other things going on this week, quite important, obviously. Inflation out of the euro area, final reading of US GDP. I think that's today, isn't it? But the core PCE on Friday is the key one. Yeah, it's tomorrow is the US GDP one. PMI's out of China as well on Friday. GDP from the UK, but I say the most important one for me is that PCE number on Friday. It's right at the end of the month. It's the one that the Fed take most notice of. So certainly it's one to watch for all market watchers I've lost my screen. There we are. For all market watchers this week. Obviously, Friday is not only the end of the week, it's the end of the month, and it's the end of the first quarter. So we've had lots of anticipated, especially for March, the very much anticipated volatility in the yen in particular. It was up and down. It's been up and down so far this week, and we're only on Wednesday. So lots of movement in the yen as normal. It's because the financial year for the Japanese ends at the end of March. They've had this they have got quite a big collective agreement when it comes to their unions and how much wages are going to go up. That's been sort of agreed for many unions around about the 3% and a bit. It's not enough to sort of start pushing inflation back up. When inflation early in the week in Japan came down again, so it's the ongoing multi-decade slow growth in Japan continues. So Japan very much in focus this week. Obviously, a new head of the Bank of Japan takes over as well in April as well. So key week this week for Japan. Anything to do with Japan and the yen in particular. Dollars weakened over the last couple of days. We'll have a look at dollar in a minute, obviously. But lots of things, lots of high impact events this week still to come. The inflation, GDP, say PCE out of the US is my number one event this week. Next week, obviously, we've got the new month starting, we've got the new week starting, and therefore we have the new quarter starting by default as well. So top of the shop next week is the Friday's April non-farm payroll, or the following Friday, I should say, not this Friday. But before that, next week, we've also got the RBA with their interest rates likely to remain the same, 3.6%. And they may start talking about a pause, particularly after today's, I don't know, is it actually on there as a high impact event? Yeah, today's inflation number was weaker than expected, to come in at 6.8% in Australia, down from 7.4%. So that might give the RBA cause to pause, as they say, and that's taken more and more precedent as we get close to that decision. The following day, we got the RBNZ, the New Zealand Central Bank, also possibly looking at a pause as well, but only time will tell what they say. That's what the markets are pricing in, I believe. And a big fall for private payrolls. ADP, really only 10,000. I'm not sure that's correct. Have to double check that, but it may be the case because we've also got the non-farm payroll looking to perhaps decline on the 7th. I need to double check that. That will potentially change as we get closer to the date. But next week, obviously this week, you've got the end of the month, the end of the quarter. Next week, we've got PMIs and non-farm payroll the following Friday. So lots ahead. Always busy beginning and end of months, particularly if it's a quarterly end, which we've got now. Obviously, lots of companies ending their first quarter trading as well, so there's lots of movement there as well. The earnings season will start mid-April, and we get into that cycle again. So let's go. Let's have a look at the charts you guys are interested in. I've got nobody from Good Morning, Ghana, Abraham. Nobody asking anything on GoToWebinar, I don't think. Sorry, Langa's asking about gold. Gold was first up from Langa. And now we got pound yen. So let's have a look at gold. Is anybody on? So that was pound yen. So we asked actually about gold. It was just about how to make money. Let me tell you, Solomon saying hello. Right, Solomon and everybody else. Let's have a look at Emily's asking about Aussie. So let's have a look at gold and then Aussie first. So let's have a look. Where's my charts gone? White charts today, black charts, black background, white background. Anybody? Any got a preference? We'll start with white, and if it's bugging you, we can always change it. It bugs me because I've got to change my colours of my lines that I use. But let's have a look at gold. This is sort of there's a lot of indicators on this chart, to be honest. We've got Bollinger Bands. We've got the blue line, which is the 50-period moving average. We've got the gold line, which is the 200-period moving average. My favorite indicator oscillator is the ATR below here. Then we've got the MACD, which I also like. You can see it's swooming around. RSI set at 14, and this actually percentage R as well on here, which I'll just hide for now. We're not going to use that one today. We're not going to use many of these today, to be honest. So gold, again, depending on your time frame, what's it doing? Well, today, gold has been descending. This is the beginning of today. So the last 10, 12 hours, it descended. It bounced off its 50-hour moving average, having gone through its 200-hour moving average. Bounced off the 1960 level, and it's rallied a wee bit, but it's capped on this 1 hour time frame by the midline of the Bollinger Band there at 1968.50 on the 1 hour time frame. Langer, but I don't know what's your trading time frame. If we go up to the higher time frames, you can see that gold is bid here on an end of day basis. There's that 2000 level, which we can't close above on an end of day basis, and we're consolidating at high. So that's the potential little triangle forming there. It's too early to call that yet, but we've had a very strong a month. If I go to the monthly chart, because we're near the end of the month, I was going to do this for most of the things we have a look at. The monthly chart, big, strong candle so far. We've only got 2.5 days left to close the month out. It's a big, strong month. So 2,000 has become the restriction to the upside. The hourly chart today has been declining from yesterday's high at 1975. So we bounced from $19.50, $25 to $19.75 yesterday, and then we've declined and given up nearly half of that into the 1960 level, and we've bounced off it. So to go forward today, we'd like to break 1968. To go lower, we need to break this level here, which is basically the 50-hour moving average at 1961 and the big 1960 level to the downside, Langer. Okay, Thayos asked for black, so nobody else has asked. So the only person that's asked for the background to be changed is Thabo. So we'll go to Thabo asked for black background. So he's the only one that's requested. So I've got to give him the benefit of that request. So I'll go back to my default black charts, or black background charts, I should say, here. But there's the gold chart, different background, same result. There's that 1975 level we rallied to yesterday. There's the 1950 level. There's the 200 EMA. There's the 50. I think that's the simple moving average, and we're up above that. There's that 1966 level we're trading at the moment. There's the brown line. See the tight spread on there. So we declined, bounced off the 50-hour moving average or over the 21. So that's sort of a delicate, a slight buy there at 2 o'clock when we went north, or 1 o'clock as that went north. On gold. Next up was Emily asking for Australian dollar. Let me just see if I can see Emily. I can't widen that. Why can't I make that wider? Yeah, Emily's asking for the Aussie dollar. Any particular time frame, Emily? And she's saying, I use TradingView. I feel I'm not setting my moving average correctly. Currently, I have the 50 EMA. Emily, it's use what works for you. 50 moving average is a fine one. Many people use that as a key pivot. Personally, I use this. I've got the 50 here on. I think that's. I think it's a simple one. That my 50 moving average there, Emily, is a simple one. But certainly your EMA, if I change that, actually let's look at the one you asked, which is Australian dollar. So for me, Australian dollar, and should be also on your charts, Emily, that if you're trading this on a short-term basis, I assume you are, correct me if I'm wrong, but that's a big down candle again today. We had a big up candle yesterday into the .67 level, but as you can see, we didn't really break away from .67. Big psychological number, .6700, Emily's saying 4 hours, so let's look at the 4 hour for you. So there's that 67 level still pivoting. See, on the 4 hour chart, we've had more attempts to break away from that level. It hasn't happened. We rallied beginning of the week, a couple of days ago. We went down here as you support through there, 66.35 on an end of candle basis, a bit lower, 66.30, something like that. I'm going to change the color of that because it's a bit too. Let me change that to. I'll change it to green and just make it a straight line. So there's our support, that blue line there, 66.30 close. We've rallied, and then it sort of cooled a wee bit. So that would have triggered along there, 28th, which is yesterday. It's moved over the 67 level. That could have been a target. But then it's reversed quite aggressively this morning. So that's down again. So again, it could be targeting this 66.30 level. Again, we'll see how that transpires. But it's been certainly choppy for you. I don't know whether that's going in the right direction or in the wrong direction. But certainly that would have, that long would have played out. But then your stop loss really wants to be around that sort of turn up there. So just above 67 at 67.08. It's a big down candle, that, isn't it? But sit and wait. Let's see if it fills this space here again. I mean, it went up quite nicely. Equally, it could come down quite nicely. And again, remember, big candles matter. Here you can see as it went, the last huge candle, because that was a pretty big candle. It's rejected the up move, hasn't it? So the bias is suggesting perhaps the bias is still to the downside for the Aussie dollar here on this 4-hour time frame. So this 66.35 area, 66.40 is a potential target zone, given that's where we've been down to recently. It was a bit of a support here. It was a negligible sort of area back here. And there's this big decline we had here at the beginning of March. It was sort of an irrelevant area. So it's come into play in the last weeks or so. So 66.30 to the downside for the Aussie. There we go. So Emily, again, it's use the charts that work for you. Anybody else on GoToWebinar before I move over to our Facebook friends and our YouTube friends for what they're asking? Emma, good afternoon. Good afternoon. Good day, Solomon. Good afternoon. The loss is what puts me off trading, really. Christopher Bisman. Losing is part of trading. If you can't cope with losing, Christopher, go and do something else. Sorry to sound so brutal, but that's what trading is all about. Again, if it's not for you, if you haven't got that mindset or you can't develop that mindset, hang on to your money, go and do something else with it. Because markets go up and down, a bit like you can see with the chart here. We got, there'll be some winning trades in here as it's looped up. There'll be some losing trades in here. Currently, that would have been a winner. Depends when it got. Depends when it's taken you out. But certainly here on this time frame, using this approach, this trade is open. It went short here on the Australian dollar this morning. There at 66.66 and sign of the devil. And it's currently out of the money because it's reversed on us, hasn't it? But you're a 4-hour trader, so you're not really going to look at that until the next candle's complete, or you shouldn't do. But there we go. So that's to the downside. But yes, if it's not for you, Christopher, go and do something else, my friend. Bangdu, good morning. Nicholas, hello. Raphael's asking, good day. I thought you were asking about a particular asset. No, it's just a good day. Man is asking, Matt, is asking about the NAS, the US 30. Obviously, the market currently isn't open, so the futures market here for the NASDAQ here intraday, Matt, I don't know what time frame, but if we look at that blue line, you can't really see that one, can you? Change the color of that, make it a bit lighter. That's the same color. I can't do that. There we are. That's the 50-day. So, the NASDAQ. Let's look at the NASDAQ on a daily basis. It's bounced from this 50-day moving average, and it's over the 21 EMA moving average. So this particular chart on this end of day basis last triggered having been short. It then triggered long here on the 14th of March. Trade what you see, not what you think, regardless of how strong on week the move up is. But you've been long from this rally here. It's peaked out at 13,000. You see, Matt, it can't get over 13,000. Intraday 1, 2, 3 or 2 days it's been over there. More closely, the end of day candles, having stopped at 12,750 last time it rallied. You can see here quite nicely there during February. During March, we've gone a tad higher, but now we can't close above 12,800, 12,900. So we can't get to the big psychological 13,000 on this futures chart. We've topped out at 12,900. So that's the range we want to break from. As you can see here, last time, 1, 2, 3, 1, 2, how many days was that? It was 10, 12 days. We were banging into 12,750. Well, it didn't break it. The longer it ties, the bigger the move, and then it moved away really quite nicely all the way down here, and it went under 12,000, down to 11,700 was the low. Now we've moved up, retraced that, we've moved up, and then we've banged higher. So it's sort of biased higher. We're still above the 21 EMA, which now sits at 12,550, and we're still above the 9-period EMA. So on this strategy, you're still long. It hasn't closed under that mid-yellow line. So NASDAQ on a daily basis, bias is to the upside. To the upside. The 4-hour time frame, there's that rally, there's that 13,000 resistance, sort of sideways here on the 4-hour time frame. 12,700 being our support zone, and it sort of ticked higher just recently. It's not strong move. It's zigzagging it. It's doing that wave. So there's no trend. The trend has ran out of steam now. You can see here how the MACD is just flattened out completely. And RSI's not doing anything at 55. You can't see the RSI number at the moment. It's behind my head, but it's at 55. So that's not doing anything. The 1 hour, on the other hand, moved under the key 12,750 yesterday. Moved as low as 12,635, put in like a tweezer bottom there, and then it's rallied and really broke here on an hourly basis, broke higher this morning at 3 o'clock, and it's rallied since then through the 50-hour. Nice strong candle there at the UK Open, European Open. It seems to have perhaps stalled a wee bit at 12,850. So it's bid to the upside on the 1 hour, but the 4-hour remains sort of a weak move up. The daily is also still up. So the daily's positive still. The 4-hour is just triggered long, and the 1 hour triggered long this morning at 1 o'clock. So again, I don't know what time frame you're trading that, Matt, but that's the NASDAQ for you. Emily, did I do the 4? Yeah, we did the 4-hour, didn't we? Langer's asking about sterling, pound sterling. So pound sterling here on the 1 hour time frame. Let's start with the 1 hour. We'll go up the time frames again. If you don't put the time frames, guys, I'll default to the daily. But 122 became a support on Friday. Monday we were higher. Tuesday we were higher. And today we're higher again. We're at 123.50. So again, another one that's been looping higher for our intraday traders. Had a strong candle just a few hours ago, breaking higher from a break low. This didn't work out. Immediately stopping us out. A big stop, that one, but that's a triggered long on an intraday basis. We go up to 4 hour. Again, the 4 hours been long from the 27th. 2 days ago. It's remained long, and it's still long. It's still above that midline. Nicely aligned moving averages, sloping up. The angle's not too tight, too steep like it is here, so it moved higher, but it's still steady away, and that's been long from 122.62, and we're nearly 90 pips to the good at 123.50 at the moment. So 4 hour traders are still long. Interestingly, we're poking to new weekly highs down that 4 hour time frame, and the daily time frame again remains bid. We're over the 21 EMA. We come back to test it here on the 15th, but we didn't break it. I guess closed us out if we'd had our stop loss a bit as we reversed, but we then broke higher over the 22 here on the 20th, and we're still going higher. So The daily remains. Let's get rid of that trend line. I'm not sure where that green trend line's from. It might be from a 1 hour time frame. I don't know. I need to get rid of it. Anyway, the daily's positive. The 4 hour is still positive, and the 1 hour is also now positive from being positive yesterday, negative this morning, and it's gone long this morning. Okay. That's answered your question, Langer. Langer, you did say you didn't actually give me a time frame, did you? No. Abraham, please. I don't know how to use the indicator, so can you help me? Abraham, this is a sort of a live analysis sort of, well, it is, it's not sort of, it is a live analysis session. So if you want to know how to use the separate indicators, watch our individual webinars. Moving averages, let me just quick recap for you. Moving averages are these lines here, which are what they say they are. They're the average of the last, of all the price action for this blue, the magenta line here, the pink line. It's last 20 periods, the last 20 candles. So what that means is at this point here, the average of the last 20 of those bars, these candlesticks, the average price over the last 20 was 122.59. For the last 9 candles, it was 122.72. And for the last 5 candles, the blue line, the fastest mover, closest to the price action, because it's only counting 5. So for that candle, 1, 2, 3, 4, 5. The average price over those 5 candles was that where we are now, rising up at 122.79. So that's what moving averages are. And if you're going to use moving averages, you want them to be moving with an angle, i.e., not flat like they are here, because they don't help you. When they're moving, when they're sort of not too far apart, not too close, they're moving in unison. So you got them in alignment. So we got 21, 9, and 5. They're the line numbers. You can use all or as many moving averages or as few many moving averages you like. But watch the individual webinars on indicators, Abraham, my friend. Hope that's answered your question right. Excuse me, my voice is gone. Ben's interesting comment there, Ben. I'm going to open a window, so if it gets too noisy, let me know, and I'll close it again. I'm just getting a bit warm here. Kalam, Imran, good afternoon, good evening, I should say. Imran, salam from Pakistan. I hope your first weekend of Ramadan has been okay. Obviously, we're Wednesday now, and I know many friends that find the first weekend very difficult, but I hope your Ramadan's going well. Imran, anything you want me to have a look at, let me know. Ben, my indicator is my eye. Well, if it works for you, Ben, my motorcycling friend, all the best. Lots of people don't use any indicators at all. Price action is all. I understand that. If it works for you, Ben, fantastic. Suleiman, good afternoon. There's nobody asking about charts. Good morning. Hello. Are you not? Simo, I don't know how are you not VOC? Don't sound. Rand, Catlego, I haven't looked at the Rand for a while. It has been bouncing around 18, which is a strong one, so I think it will break below it and continue down. Possibly. I remember looking at the Rand a few weeks ago, or a week or so ago, Catlego, and it was 18 and 19 was a key round number. Let's have a look at the EMAs. Sorry, the where's they gone? There we are. EM currencies. Rand. Let's have a look. This is a Rand. This particular setup, ladies and gentlemen, is the Heiken Ashi candles. Blue is good, red is bad, basically, up and down. There's pros and cons with every type of trading, but Heiken Ashi smooth out a lot of the noise of normal candlesticks. They're not ideal. Nothing's ideal. But here you can see very good for trending markets. Can be used on, end of day basis, intraday basis. I really like how it takes a lot of the thinking away sometimes. But what's your question? It's bouncing around the 18,100. Yeah, I mean, remember these big round numbers. Absolutely, look at that. That's a big support, isn't it? 18,120 on my particular chart there. But there's that 18. Make it as you said, 18,1. I mean, here we had a nice strong rally for February. Lots and lots of pips in the bag. We dipped and went short at the beginning of March. Rallied at the beginning of February. Went to new highs, and we were. No, I remember right. I think it's when I last wrote about the rand. I think it was beginning of it's somewhere around here. We were looking at getting to 19. It was on the horizon, wasn't it? 1871, 64 is our high there. 19's just off the top of the chart there. There's the 19 line. And it looked like at this point, having rallied, big strong rally, a reverse up, looked like we were going to have a go. But interestingly, we then reversed for 3 days. We then rallied for another 5 days. But look at the size of the candles here. Because Lego, the bodies are smaller than the move up we had here, and certainly some of the move up we had here. It was running out of steam. Big indecisive candle following it, then a significant down candle on the, and we haven't really recovered from that on the 23rd. And I think your comments are fair. If we get as low to test the big round 1800 level, you can see where this is coalescing. The 2 moving average on this particular chart are the 50.49, which is equivalent to the 50-day moving average, and the 13 moving average here, which is the brown line on here. Okay, on this particular setup. So yeah, we got strong, as you say, strong horizontal resistance through 18,100. And then even bigger resistance because we got the 50-day moving average on that's the 49, but it's within a smidge of the 50-day moving average around the big psychological 1800 as well. But that's looking relatively sort of ran out of steam on this rally up. Doesn't want to get over 1850 through here. There's 18. There's about 18. Where's 1850? 18.5 is there. It's ran out of steam there, didn't it? And it's moving down. So that's the range it's in. A break over 18,100 should take it to at least test 1800. Then we could move down, just like we moved up nicely. It could easily move down nicely. Again, fundamentals aside, but the dollar remains. The rand has remained or was very strong at the beginning of the year. Here you see we moved down through November, December. And January bottomed out around here at 17 or under 17, and then we've rallied, or the dollar's recovered significantly in February. Run out of steam a wee bit in March by the looks of things, rolled over, but remains relatively strong. So we've got the weekly and still see it's been strong, and there it pivoted last week. It went the strong trend broke last week basically, so that. And guys that trade this on an end of week basis would have been out last Friday, and we've come down a wee bit this week. So you'd like to see those candles start getting bigger for it to move down and a break of that 1800. But yeah, absolutely nailed it, my friend. Yeah, that 18,100 key level. Watch and wait and take appropriate action if that happens. Catello, well spotted. Amzan, any particular pair, any particular time frame? Everybody talks about the euro, but any particular time frame, my friend? Let's have a look. It's been up this week over 107, 108. Let me find the euro. Let's use this one again. I'm saying we had lots of questions last week, didn't we? Yeah. So euro, you're asking. So, but let's have a look. It's been bid really since Monday, since this test of the 107.50 area. This 200-hour has helped, and again, intraday it's been long, and we're still long. That closed out here, went short there. That's got turned around here on the 1 hour time frame. So this was long from Monday through Tuesday. Closed under the. That would have closed out the trade there under that first break under the yellow trend there. So a nice big. So the entry would have been here. If we just trailed your stop loss up or using the moving averages as your stop loss, you'd have got in all the way up there, 678 points, 67.8 pips. 6.64%. Nice trade. You would have then, unfortunately, gone short. And I'm so fortunate you follow the rules. You would have gone short this morning there for 208.31. Looked okay for an hour, and then it closed you out as it's reversed back under there. So you'd had a small loss. But then, that would have actually closed the short and then triggered long. So you'd have been long here using this strategy from there this morning, and you're still in the money. 1 hour traders are still long. 4 hour traders have been long from earlier this week. So 4 hour traders looked like a big short was on play. It didn't work out. Actually, that's a losing. So that's a losing trade. That would have been short there and out there for a loss of 67 points. 670 points, 67 pips. But you've gone long here and you're still at the same time. So that 607 has been more than taken back, as we're now 1,700 odd points to the good and still in the trade on the 4 hour day. So we're 100 points up from that, down to that, up on that 1 hour. And the daily time frame been chopping around sideways. Short didn't play out. Support, you can see the big fat support there, aren't you? That looked like that was moving down significantly, didn't it? Didn't happen, but you were again small loss, but a long position from the what's that? That's the 17th of March. So euro is long daily. It's long 4 hour, and it's still reversed and long on the 1 hour as well. So I don't know what time frame you're trading at, but they're the trends that are long, Amazon. Let me know. Some questions coming in here. Michael's asking, good afternoon to you, gentle. Please, can I have documentation for beginners that I want to increase my knowledge in the environment of trading? Michael Sudoka, I don't know where you are in the world, but my colleagues, my African colleagues, are running a course basically each day of the week. So Monday through to Friday, it's a beginner's course. So check out our webinars. Our learning package in Africa. You might not be in Africa, so that might not be appropriate, but you can do it online, or you can come into the office. Our offices are in Nairobi in Kenya. We've got an education centre in Lagos and Abuja in Nigeria, and in Johannesburg in Sandton in South Africa. If you want to come into the office, get onto the website and log an online a face-to-face meeting, or you can join. I say the online event is all week, Monday, Tuesday, Wednesday, Thursday, Friday, around about the similar sort of time we're doing these live ones. So on top of that, Michael, get onto our website, get onto our education page, and on our website here, let me show you, under education, and there's all sorts of stuff here, videos, e-courses, obviously the webinars, like things we're doing now, getting started, our written analysis, our audio podcast. If you haven't heard enough of me today, listen to me chatter on about stuff. But yeah, get onto all of that. Ebooks you can download. It's all there to help you. Anything that's missing, Michael, let us know. Linda Hook is asking, is it compulsory to trade with indicators, or can we also analyze the market using other ways? Of course it isn't compulsory. Many people, let me just show you an example. Many people choose not to trade with any indicators. This is about as simple as I get. This is a setup, just the candlesticks, some volume, and a stochastic. But I do use a stochastic, but that's to do with price action. Is it above or below my one line here? So I'm going to look at when it's above the green line, I'm looking to take long trades. When it's below the green line, I'm looking to take short trades. That's simple, Themba. This happens to be my favorite indicator, or one of my favorite indicators, the 21. Hopefully you can see that. There you are. It's the 21 exponential moving average. And this happens to be on the 5-minute time frame on the German DAX, the futures for the German DAX, the GER 30, which is, it's long at the moment, isn't it? As its opening price, it was much higher than the closing price. That's positive, and it's been positive most of the day, isn't it? Okay, so again, I would have got in long there. out there. It's gone under, gone long there. So again, it's lots and lots of different ways of trading that. Michael, you're saying you're in the Cameroon. Okay, obviously it's difficult to get to all those centres. But yes, click on the Africa website and look for the training courses there, or just keep up with these ones based out of our headquarters here in Cyprus. Michael, I'm here to help, my friend. So I said there's a contact number at the end of the webinar. Webinars at hfm.com. Let me just again, if you've got any other questions, let me just bring this. The quickest way to get hold of me is here, webinars at hfm.com. With any of your questions. If none of the education makes sense, or you're having problems with the videos or downloading stuff, email me there. Thambo says, my audio okay? I think so, guys. Is the audio okay for you? Or is it just Tharbo? Tharbo's saying, is your audio okay? Everybody else is saying it's okay. I'm getting thumbs up from everybody. So it's looking that way now. Then what have I done with my? I was like, yeah. So answering your question about do you have to use indicators? No, you don't have to use indicators. All right. Okay. Does that answer your euro? Answer. I hope you answer your question. I hope you'll probably comment later down there. Joel saying, sorry, I don't know, my friend. The current one, that's the DAX with a white background, but we were asked to use black backgrounds today, unless somebody wants me to go back to white backgrounds. What to expect on gold this week, sir, says Sari. Well, gold, I'll leave this white background on if I've got gold here. I have, indeed. Gold this week, well, let's go to the daily. We said earlier, we've ran to 2,000. It's the end, as I said at the beginning, Sri. It's the end of the week, it's the end of the month, and it's the end of the quarter, so you can have some significant volatility. It's been a very strong month for gold, as you can see here. The big positive green candle started down here at the beginning of the month, beginning of February, and the beginning of January at this 1825 level. And that's been big fat support, hasn't it? That's the level we closed November out on there. See that? December the year. So 1825, and we've rallied from that in January. We dipped back to it in February, and we've bounced from it, and we've gone higher, testing the key psychological. There's that 2,000 level. We haven't been able to close above that. So coming down, big strong week. A couple of weeks ago, the worry about the banking crisis, gold rallied significantly. Doji candle for last week. This week isn't completed, but it's still looking. It could be a hanging man. It could be end of this big stick up, but that's a huge rally. On an end of week basis, if that's moved, 10,000 points, 5% rally, 5.5% rally for that week. You'd need to close down here. Get rid of 5,000 points and close down here around about this 1930 level for that to look a week to break suggest that this might move lower. So it's a relatively strong week still. The daily candles are sort of clustering. They're sort of running out of steam as we get towards the end of the month. But it's still bid. There's the 21 moving average all the way down there at 1921, and we're still way above that at 1960. And the 4 hour, it started. Yeah, there's that running out of steam idea there as it sort of consolidated at that top there. And the 1 hour this week has been quite relatively volatile again, but we've broken. Yesterday, as I said earlier, we went down to 1950 yesterday, and on Monday we rallied to 1975 yesterday, but we've dipped from that today back to 1960. So it's sort of in a bit of a sideways action at the moment on the 1 hour days. As far as the end of the week's concerned, the next couple of days, 4 hour is again perhaps running out, so it's a bit difficult to tell at the moment because we've flattened out, but we're right midway of that range, aren't we, into the end of the week. Tabang. Hi, Stuart. I have a question. With the leverage of 1 to 1,000 on micro account, what is the highest lot size I can open on a trade with HFM? It depends. Tabang, remember, a 1 to 1,000 is a very, very high leverage rate. Okay, so understand what that means. Okay, if you've got a micro account, trade very, very carefully. As a beginner, again, I can't tell you what to do. I can't give you advice. I'm not allowed to. The regulator doesn't allow me to give you advice. I'm not registered or regulated to do that. But there's a reason we have micro accounts. There's a reason we have a 001 lot size. So start, as with anything in life, start with the easy stuff. So start with the smallest possible lot size. Get good first. Get consistent. Understand what you're doing. If you have to go back to a demo account because you've blown your live account, so be it. If you've got enough funds in your account to trade it, but stick with nothing wrong with getting good and getting consistent and finding something that works for you with 0.01 lot. That's why we have micro lot size. So again, I can't tell you what to do. I can't advise you what to do, but there's a reason that micro lots are there. So start with a micro lot. Cent accounts are also available in certain parts of the world. So get good, get consistent, get comfortable with losing, get comfortable with winning, and so you can't see me, can you? And take it from there, basically. Most people fail trading because of their mindset. They get their mind wrong. They think they've got to win all the time. They can't accept losing, and that's why lots of people give up. It's not the technicals, it's their mind that beats them more often than not. Can't get too excited when you're winning, can't get too depressed when you're losing. It's easy to say, it's very difficult to do, but keep practicing at it, and I'm always here to help. Okay, so hope that's answered your question. Start small, because it doesn't matter. If you can do it with a micro account, you can do it with a bigger account. You can do it with bigger lots. It's about getting a process. It's not about the profit and loss. It's the process of trading. It's the process of doing it right. Please provide some analysis on the euro and the Aussie. We've done them earlier, but I'm happy to do them again, my friend. If I've got the euro here, if you're happy with the white backgrounds, these simple charts, let me know. My voice is going. Bernard, I'll come to your question in a minute. I hope you're still here. So just let me have a look at this euro again. Where's my charts? We've got the euro here. 25. Got the euro. Yeah, there we are. Euro. Well, again, depending on your time frame, Nicholas, but certainly on the 5-minute time frame, he's been long, hasn't he? He was short earlier. He's been long. I'm saying he. I don't know why I call him he. But the euro has been long. Certainly, that failed big down candle. Look, that was quite positive. But see what we've done here even on the 5-minute chart. We've sort of broken out of that range there. It was top there. Looked like it was at that point looked good. It reversed very aggressively. Looked like that was going low. It didn't want to. Held here basically. It's come back, and that's the big breakout. There's the breakout because we've broken above previous levels here. Remember, this is only a 5-minute chart, so you've got to be. You can't hang on to your views a lot. Things move around quickly. So Nicholas, certainly that's been long since 12:15, and we're still long here at 14:50. So thanks very much. Big rally, retrace my 21 EMAs, kept me in the market there. Or again, depending on how you're trading this, you can use a multiple of the ATR. You can wait till it reverses up here. So you might have had your stop loss there and got stopped out there. It looks like it was going to go short. It didn't. I would have got back in there. Here, I'd have my stop loss at the 21 EMA, and I'm long from there. Still added there because it's gone to new highs. And then, even added there because we got to new highs of the day there. So I would have added last trade for me. Just looking at the price action, I would have added it there at 14.30. Again, I can't tell you what to do, but that's what that price action is telling me. And it's rolled over a wee bit. That's an engulfing candle so it's still relatively positive. My stop loss would probably round about here now. Because that's see how that 108.60 was resistance. We dipped from it into the 21 EMA. We then went to it and then broke through it here. So my stop loss would be around about here at the moment. So yeah, Euro's bid there on that 5-minute chart. But if you're not interested in the 5-minute chart, the 1 hour chart went short, got stopped out, and then went long. Would have gone long here, got stopped out perhaps, and it's been long this hour basically. So it's been trending, as we said earlier, from Monday, Tuesday, and it's reversed a wee bit today, but it's gone long with a big strong candle down the 1 hour time frame. So Nicholas, I don't know what time frame you're trading that, my friend, but yeah, that is long. The daily remains long because there's a 21 EMA. Thank you very much. Testing 109. The 4 hour also long from a break up from a failed move down, big move down as well, from the 27th, which was when was that? It was Monday, wasn't it? And it's still trailing up. My stop loss is probably, I might have been, if revert. No, my stop loss would be around about the moving average. I use that moving average as a stop loss now on that 4 hour trade. So that's up. Euro, that was the Euro. Your other one was the Aussie. I don't know if I've got the Aussie here. I haven't. Let me go back to the black chart. Sorry, profile. My default. The Australian dollar was weaker this morning, wasn't it, on the weak inflation miss we had. Australian dollar, 4 hour, there's that big turnaround, rejecting, we did do this earlier, didn't we, the 67 level today, big rally yesterday, 67.08 for the 1 hour, that's still short, it's come off 666, that key level we talked about before, so yeah, that was through there, so we've bounced off that level. Interesting, these levels count, guys. I'm just making this up. Big up candle, but at the moment it's still short on the 1 hour. The 4 hour is short. It's reversed a wee bit, but it was long into 67 plus. Then it's reversed quite aggressively. And again, just doing that 5-minute thing like we did with the Euro. It's been short. Then it went long. It went long there. Using this crossing 21 EMA again, it went long, got you out there, got back in there, got out there. So where do you get in? That was a losing trade, going short, reversed immediately. So it's long, out again. And currently that's long again if you're trading that with those rules. So that's been long from 14.34 on the 5-minute for the Aussie dollar. Bearing in mind that the higher time frames, that the 1 hour is still short, 30-minute is still short, and the 15-minute has just triggered long, short, and then it's gone long. So you're with 5 minutes long, 15 minutes long, 30 in the hour is still short. So again, depending on how you're trading that, Nicholas, my friend. Aman's great question. What is the difference? Many people ask this. The S&P 500, the US 100, and the US 30. It's the size of the market. The most important one, is the S&P 500. It's because it's the broadest. It's 500 of a mixed variety of US stocks. So 500 big American companies are in the S&P 500. The 500 biggest American companies are in the S&P 500. Standard & Poor's 500 it stands for. Some of the world's biggest companies are within that, and they're not all equally balanced, not all equally weighted in that 500. The big companies like Microsoft and Apple and Amazon and account for much more of the weighting of how the index moves compared to some of the other smaller companies. So S&P 500, a mixed range of different companies, whether they're technology companies, whether they're typical old-fashioned industrial companies or service companies or manufacturing companies, big, broad range of American companies. The US 100 was created relatively recently by NASDAQ, one of the exchanges, and it focuses on technology companies. So Apple, for instance, is quoted and traded both on the US 100 and the S&P 500 because not only is it the world's biggest company, it's obviously the world's biggest technology company as well. It's like Microsoft are also traded on both those exchanges. So that's 100 of the biggest technology companies in America. So that tends to be a wee bit more volatile. One, because it's only got 100 companies in it, and two, because it's technology-led companies. So they tend to be growth companies or traditionally growth companies, but it's much more sensitive to exchange rates and interest rate changes. So, the NASDAQ tends to be the most volatile, i.e. tends to go up more, percentage-wise more than the S&P 500 and the US 30. And and goes down more, so it's the most volatile. So people like trading it because it gives you that volatility, that movement. Remember, as a trader, you don't care whether it's going up or down. You just want to make money. And that's it sound a bit odd. A lot of people lose focus when they come trading. It may seem sound, but don't forget, you're here to make money. You're not here to be right or here to have a good time. It's all about making money, guys, isn't it? So you need stuff to move about. Stuff that moves about too much, a lot of people can't cope with. So you find something that moves enough, that is liquid enough, has enough volume in it, that fits your personality. So the NASDAQ, the USA 100, that's what the USA 100 is. It's 100 big technology companies. And the US 30 is the Dow Jones, the DIJA, the Dow Jones Industrial Average, 30 biggest industrial companies. So companies like Caterpillar, a big maker of heavy machinery, is a typical USA 30 company. General Electric used to be the biggest company in the USA 30 before its demise. So that's industrial companies. So the US 30, or the Dow Jones, as you see it quoted, has done quite well as people started worrying about recession, because industrial companies tend to do a bit better than technology companies, or a brighter spread of the S&P 500. So they tend to move in unison. But as I said, the NASDAQ tends to be more volatile. The S&P is the key indicator of the health of the US business community. Big banks are is in the S&P 500, and the USA 30 as well, the industrial company. So Raytheon, Caterpillar, and other big companies like that, such as that. That's the difference between the three. Obviously, you can trade all three of them as a futures contract. You can trade all of them as a spot contract with us. Be careful. Make sure you're using the right chart. Okay, but that's what they are, and they're called indices. Indices. Okay. Help us analyze gold. Shahid, I thought I have, but there we go. Gold here on the 1 hour yesterday, 1950 to 1975. Hit a psychological level. It declined into close. It's declined all day today, but not as low as it did yesterday. Found support at 1960, and then it's bounced off that. Technically, that's a week. Technically, here on the 1 hour time frame, we've had a nice downtrend, back some pips. Thanks very much. Reversed this morning. Reversed again to trigger a long trade at 2 o'clock. Is that 2 o'clock or 1 o'clock here? And since then, it hasn't done anything. My stop loss will be down here around about the 50-hour moving average, but it's not doing anything because the moving averages are flat. So it's a very weak entry. I probably wouldn't have taken that if I was trading that myself, because it's flat. Okay. Whereas that one, I would have taken it because the candle's big and the moving averages are sloping, like we said before. They're nicely aligned. There we've sloped down. Nice short. A weak entry for an up trade there at 1960. We'll see how it plays out. If you have a system, you've got to take all the triggers, all the triggers or trades it generates, just to prove that the validity of the system. So currently on the 1 hour time frame, gold is long on that crossing moving average. The caveat is the moving averages were flat, and it may not play out, given that we've had a nice downtrend. But still, our stop losses here, our entries up there, and it's moving to the upside. Okay, Shahid. Daniel, sorry, I'm Ezekiel. Can this platform work with a smaller? Certainly, Daniel, Ezekiel. It can, but you got to be able to understand, the issues of a small account and small, stick to small lot sizes when you have a small account. Okay. Bernard, sorry, there's lots of questions here. Bernard's in the UK. Bernard's saying, can I Have you an office in Birmingham and Westminster? No, we don't. We have an office in London, Bernard, but I'm certainly happy to speak to you at any time, my friend, online or offline. I'll be in the UK from July. So you come and see us in our London office if you like, or we can certainly meet before then if you want. Can I make $1,000 with the capital of $100 in trading in HFM? Victor, I can't say you're going to make money. Remember, most people lose money, unfortunately. But that's think what you're asking, Victor. You're looking to make. How much are you looking to make on a percentage basis? If you start with $100, you want to make $1,000. Victor, answer that question first. Okay. Hopefully, you come back to me. How much you're trying to multiply your money? You can do it, but it's difficult. Okay, and you've got to have discipline. You've got to have patience, and it's the same with any amount of capital. $300. No. Oh, you're talking about 300. So if you had 300, you want to make 1,000. You're trying to, triple your money, aren't you? You're trying to, 300% increase. That's a big increase. But yes, it can be done. You've got to do it carefully. So if you've only got a very small account, what's 1% of your $300 account, Victor? Because that's how much you want to be risking on each trade. What's 1% of your $300 account? Correct, $3. Yeah, so you don't want to be losing more than $3 to $6 maximum each time you lose a trade when you start with $300. If you're losing more than $6 a trade, be careful. That's what I'm saying, because you'll soon run out of money. Okay, so when you're taking a trade, let's just use this as an example, guys. So if this is, let's say this is whatever it is, this is gold. So this system says it's triggered an entry there at the top of that white candle. Our stop loss, what really ideally needs to be at the bottom of the turn in the market, which is that all the way down there. So that distance, to be very conservative, that distance there between the two blue lines, let me just put that. So this distance here, that needs to be your, 1 or 2% of your account, 3% of your account maximum loss. Okay, so if this trade goes against you, if your stop loss is all the way down there, you want to be making, or we don't want to necessarily set a target. Well, you can set a target, obviously, but that's the key thing to worry about: the loss, the risk level. And that's what, when you see people talking about R level, I mean, you could be a bit more aggressive and have the stop loss just below. That's probably what I would be doing, just below that 50-hour moving average there. So that is definitely my maximum stop loss there, and then just see what happens. So what I would set my volume, the amount of risk. If that's what it says. Can you see what it says there? It says 544 points. So whatever it was price per point, I won't want to be losing more than 2 or 3% of my account. So to break even, I need to be up here somewhere, don't I? 500, and that's what I'm waiting for currently, to at least break even. But it's not a high, relatively high probability trade. Mark saying he's lost me. Am I still here, ladies and gentlemen? Can you still hear me? Mark's is the only one that's lost me. There's lots of questions still. Sorry. What am I asking? So that's your risk management. That's where that's how you want to manage your account, and that's why money management is so important. Watch our webinars on risk management and money management. Come to our Friday events if you're in Africa, Victor. Thango's still saying hear me, so it must be just Mark. Let me just answer Mark. It's okay for simply. Sorry, Mark. So I hope you got the point, Mark. Okay. look after your initial investment. So keep it small, and you lose. His Mark's back. It was his network. Yeah, that's quite often the case. Sometimes it's our network. Sometimes it's your network. But okay, so yes. So Ezekiel, I hope you're answering. I'm sort of answering your question as well at the same time. So yeah, always about risk management, whatever type of trading you're doing. LinkedIn user, hello from the Philippines. May I know your views on the dollar and Bitcoin and the 4H charts? Thank you. Certainly, gold here. This is the 1 hour, the 4 hour. It's ran out of puff, hasn't it? It's been declining since this peak here when we went over $2,000. Declined quite nicely. Nice strong trend down. Thank you very much. We went under the actual 1950 level here. Big down candle. Didn't move down again. And now it's sort of ranging. Okay, it's not, as you can see on the moving averages. Whoops, there we are. It's the flat, so it's not triggered a trade really. It would have gone long here, but it's run to that 1975 yesterday, so that would have been long. It's stopped out here, negative. It's trying to go short, hasn't happened. Nothing's happening there. There's a trend following trader for gold, but overall, there on your 4 hour time frame. So what's the high? So it's flattened out on the 4 hour time frame. LinkedIn user. The daily remains relatively well bid because the 20-day moving average is all the way down there at 1926, as you said earlier. The 9-period moving average, which is one of my keys, sits there at 1960. So it's still biased positively, but it's, again, you can see that it's flattened out. So in the 4 hour, that's the key. Well, that's the key support. Then the next big support is there under 1900, the 50-period moving average. But it's still biased to the upside. So I'm neither way long nor short on that. Having rallied to that 9,000, 2,000 level, lots of people got out. And the end of the month is approaching. Bitcoin, on the other hand, has had a right old day. So 4 hour traders should be positive. Bitcoin, obviously very volatile with the news flow. Regarding Binance and a couple of weeks ago or last week the capture of that guy in Montenegro that was behind Luna. So it looked like it was drifting lower into this 26,500, but it tested that quite nicely this week a couple of times, and we've had a big up candle. Has it? But it can't, as you can see here. Let me take it to the daily time frame. You can see. So the higher time frame above your trading time frame, you can see it doesn't want to close above 28,000 on an end of day basis. So for 1, 2, 3, 4, 5, 6, 7, 8 days now, we're into the 8th day. This might be the breakout day. It might not be, of course. Days and over, so you can't make a decision on this candle. So up until yesterday, that was the big resistance. We couldn't break above 28,000. A significant break of 28,000 on an end of day basis is a positive move. But on an end of day basis, the Bitcoin remains strong from this big candle here we had on the 13th, and it remains bid. It hasn't closed, although it's consolidating above here for 8 days. It hasn't closed below the 9-period moving average, and it's looking like it's having a strong day today so far. So the 4 hour position is supporting the daily. The daily position, this sort of rounding top here at the 28,600 level. We're consolidating highs here. So although we tested this 26,500 level, and at the last candle, we closed at 12 o'clock 3 hours ago, is a positive one. So that would have triggered long, but can it close above that resistance level? That would be the big question on the 4 hour time frame. Philippines user, my friend. Victor, is it good and profitable to do copy trading? Follow people. It's fine to follow people, Victor, certainly, but understand that the nuances of the account, understand how you get paid, really drill down into how good these traders are, check their performance, check their performance on closed trades as well as trades that are open. Some of them have, trades that remain open because they're in a big loss. They can't take a loss. So drill down into it, Victor, but it can be certainly a way of getting into trading. Thami's asking about the yen. The yen, what time is it? It's 15 minutes. As I said, Thami, lots of volatility for the yen this week because it's the end of the financial year at the end of the month as well. So there's lots of flows in the yen, both back to Japan and out of Japan as well. So the yen today has weakened from a stronger day yesterday, but it was weaker early in the week as the sorry, what am I talking about? The yen has weakened today, not strengthened. Dollar yen here has obviously gone up from a stronger end of last week. So we went down to 130, went as low as 129, 50 zone on Friday. We rallied Monday. We were weaker yesterday and we're significantly stronger today. So broke above that resistance we had on Monday, the 200 hour there, around about that 131.70 area. Declined into 130.40, broke through 131, and we've rallied today. So it's bid. Next resistance, look left, takes us to 133. This level here. We're in that congestion zone right now. See that? So we're right in the teeth of it there, 132.38. So 132.50 needs to break. If this rally is going to continue, it's been a good morning, retraced out long again here as it brought back over 132 on the 1 hour time frame, Thani, my friend. Hello, how are you? I'm in Morocco from today. You're a chart 5 minute new. I'm want to deposit 5,000 Skrill, good or no? Seymour, I mean, deposit what you like, what you can afford. You know what you can afford to win and lose, basically. So be aware. It's the 5 minute chart for you. Skrill is a good deposit, of course it is. Go back to that. We got the 5 minute you're talking about. Where was it? 5 minutes. It was long. It's rolled over. It's just gone short. There, euro. It's ran out of puff. It's obviously perhaps some news. But that's was long, out, long again, long, and it's reversed. And it's short now from just before the full hour, and it's moving down. There's the next support, that 50, 200 period moving average at 108.41 from 108.46, so 5 more pips down to that level there. Certainly. I'm bearish bias on the dollar at least to the 129.80 level for bank. Okay, well, don't try not have an opinion. Opinion doesn't make money. Ego doesn't make money. Trading your strategy should make you money. Trade and being disciplined and patient about exits and entrance. As far as the yen is concerned, Bank again, I don't know what time frame you trade, but today it's certainly long. It's long way away from your 129.81. On the daily end of day basis, it's still bearish. You're right. It's bounced off 131, but it didn't. 129.80 has been the support area. Excuse me, here below one. But it's a good day today as we come into the end of the month. So as I say, we get this volatility. But as an end of day trader, you're still short that. It might stop you out today if it closes above that yellow line for the first time from the trend you had there from the beginning of this one here. As it's broken through the 21 EMA there, as they've crossed there on the 10. So you've been short all that time. And again, it stop you out there unless you've been, you've reversed. As it's reversed, depends where your stop loss is playing. Can we still trade dollar yen on HFM? If yes, is it a buy? It seems the uptrend does not end. It certainly doesn't end at 18. Yeah, I'm guessing yes. Of course you are. I wouldn't be able to show you the charts, but yeah, the lira is weak. Is that currencies? That was rand, wasn't it? As far as there you go. That's the daily time frame going all the way back to July 2022. No, it isn't. Yes, it is the daily time. Yes, but very volatile LinkedIn user. So be careful. See these, it's huge moves huge moves. But you can see here on the Heikinashi candles, they've been blue, and they've been blue for a long time, haven't they? So yeah, it was strong couple of days, strong couple of weeks. There's that 19 level. We were talking about 19 and 18 on the rand. Well, here it is the Turkish lira weakening to record levels. It's horrendous if you're, in Turkey and you're trying to export stuff. Import stuff, and you have to pay dollars for it. 19, 20, 60, 19, 20, 50. So it's been a right old rally, and that's been going on for weeks and months. That's the weekly candles, my friends, just over the last couple of years. I've got the monthly candles, even scarier. The monthly candles literally off the charts. So, only a few years ago, we were down here at $3 and $4 to the Turkish lira, and here we are a few years later, 4 or 5 years later, at 19. A horrendous impact, huge inflation levels in Turkey. So the trend is very much up. That's the monthly, that's the weekly, that's the daily. Yeah, don't fight the trend, my friend. Something different. Thank you, Hillary. The pound against the Swissy. Let's have a look. Pound against the Swissy. I think I've got it. I must have it there. Pound Swiss, same black background, guys. Again, Hillary, I don't know what time frame you're trading it. Mark, yes, certainly. You'll get a copy of this video recording as well as the charts. Well, not the charts. The slides I was using earlier are also they're downloadable from the website if you can. From the GoToWebinar site. So download them there. If it's not working, if you can't do that because of your intermittent network, I'll email you a copy of the slides afterwards as well. Okay, let me just make a note of that. Mark, email. Slides are just those few I did at the beginning. If you want a copy of them, if you do, let me know. What are we doing? Pound Swiss. Hillary, what time frames, my friend? Adnan, hello. How are you? Right. So it's been bid from this low down here. Monday, Friday, we went to 121.20 zone, and it's rallied here on the 1 hour time frame. It's been long. Short. Well, not short, but closed the long out here. So there we go. There's our cross under the out there. Back in there with the trend. Nice one. Might have added there, but it's 113. I might have waited for it to break through. Added there, probably. Added there. Probably not added there, but who knows? I might have done. Certainly would have added there. And it's struggled. Can't get above that climatic high, interestingly. There we go. Classic sort of move. Climatic high here earlier today. Tweezer top. See the tweezer top? I mean, that's not really a tweezer top because that candle's too big, but certainly that's a big down candle, wasn't it? But it didn't break the 21 EMA. It did there, then it's reversed. So we've been long. That short has been stopped. No, it hasn't been. Yes, no, it hasn't. That's still short because it hasn't closed over that. Depends where your stop loss was. Probably stop loss would have been, my initial stop loss would have been around about there, probably, if I'd taken that short there. But I probably may not have done because the movement, the trend was still up. So I was waiting for something to happen if I was actually trading this. So it sort of ran out of steam down that 1 hour time frame. But what is it? That's just the 1 hour over the last few days. Well, what else is happening? Well, what's the longer term trend? Well, it's a bit messy, isn't it? We've been down, we've been up, we've been down. The lows are generally getting lower, although it's a big spiky up day followed by a big spiky down day. That was obviously last Thursday, 21st. Was that that was the day before. That was the Swiss Bank and the Bank of England. So we went over 1/3. In fact, we went over 140, didn't we? So we tested. There we go, 140 down, and then it's bounced yesterday quite significantly. So on an end, that's a bit messy. But again, if you had to call it, it's biased to the upside. So day trend is sort of long, although it's not Hillary. The day trend is sort of long. It's a bad trend line. I'm one of the worst draws. I've never try and follow one of my trend lines. They're always terrible. Because that shouldn't have gone through. It should be about there really, or the sort of lows there, isn't it? Yeah, it's only touched it twice as well, hasn't it? Yeah. So it's sort of biased to the upside. That's what I'm trying to make the point. Although it's very messy on a daily basis. The 4-hour time frame is still, it's rallied. It's short, and again, that's a bit cleaner. But it went long. Last trade was long here. Having been short and flat, but they were moving up. But then it's run out of puff again as we got to 136. So it's rolled over at 113.60 and rolled over. It's still long, still in that. And the 1 hour, as we said a minute ago, long, rolled over, short, trying to. So that's short. The 4 hour, you see the 1 hour sort of rolled over. The 4 hours still long, and daily's biased to the upside. So it's a bit messy, Hillary. But that's my analysis of pound Swiss for you. Can you share your app or Telegram number? The app is HFM. Download it from the App Store or on Google. Telegram numbers. Telegram. Eric, where are you in the world? And we got Telegram links for different parts of the world. So let me know where you are. Mohammed, good afternoon. Mohammed, thank you. And then I'm getting tired now, guys. I'm going to have to wrap this up, I think. Can you explain the chart 7? V, yes. Certainly I can. This particular setup, I've got lots of different sets, but this particular setup is my crossing exponential moving average strategy. Watch the full webinar, how to trigger entries, trigger exits, trailing stop loss, fixed stop loss, using the ATR to create the targets and resistance levels, all sorts of ways of doing it. But basically, the 3 moving averages I'm using here is the 21, which is the magenta line, the 9, which is the yellow line, and the 5. So the lower the moving average number, the closer it is to the price action. We have a 3, 5, 21 setup as well. Many people use 5 and 13. It doesn't really matter, to be honest. It's just because a moving average really gives you the bias of the market, the trend. So you want to be above it or below it, depending if there's a trend forming. And they're no good, as you can see here, when the price is going sideways like it did here on the 27th for this particular asset. There was no angle. They weren't going up or going down. They were going flat. They were sort of meandering about. So that's when the market is oscillating. That's when the market is in a range. So you want, oscillators like the stochastics to try and catch the top and the bottom of the range. Moving averages come into in their own when the market starts to move in a particular direction, like it did sort of here off this big candle here, but it took a while, didn't it? It went up a wee bit, then it retraced, but it didn't break down again, didn't break under the magenta line. So that was quite positive. And then by the end, halfway through the following day, we poked a new high from the day when the big candle had happened. Now we had this big breakout, so we were then on there. Following the rules of in and out. We'd have been in here, big candle here on the, whatever that was, 9 o'clock on the 28th, and it rallied away then. So the moving averages are in line. So that's why I like the moving averages V. I always have. So that's the indicators on there. The other indicators to back that up are the MACD here at standard setting, 12, 26, and 9. The RSI set at either 14 or 7, it's default at 14. Over 70 is overbought, they say. Under 30 is oversold, they say. Also the technique. But, when a trend is strong, markets can remain overbought. But as you see, eventually it flattened out and the RSI didn't sort of move down. ATR is exactly what it says. It's the average true range. It's an absolute number. And it's a good one for setting stop losses and setting targets. But I say watch the webinar on ATR for more on that. I'm saying I think I ended the last webinar with you asking lots of questions, which I really appreciate. So I'm going to wrap that up as well. Which asset has the highest average trading volume in currency, stock, commodity, and bond markets? Very complicated question. For the currencies, it'd be the euro, dollar. One stock with the highest average trading volume, well, it'd be the big stocks like the popular ones like Amazon or Apple or Microsoft, the big American popular stocks. Commodities, it would have to be gold or oil, and the bond market would have to be the 10-year bond, or 10-year treasury, or it depends which way you trade it, whether you trade the bond or the yield, would be the 10-year if you're asking that sort of question. There we go. You said again. How does broker pay money to pay trader that make profits in millions of dollars on a daily basis? I don't know what you mean. How does brokers make money to pay? How do brokers make money in many ways. I'm saying, my friend, you either if you're trading a very tight zero spread account, you'll get charged a commission for each of the trades you do. If you're not, the spread will be a bit wider, and we make our money on the difference between the buy and the sell price. Brokers, there's overnight charges as well if you're holding stuff overnight. So there's a charge for that. It doesn't really make very much money from our point of view from that. Obviously, the more volume that goes through, will get paid on the volume. But no, we want profitable traders. Don't get me. Lots of people think brokers want just your money off. You want your deposits. We're not really that bothered about your deposit. We want you to be successful, because successful traders generate. Sorry, you can't see my ugly mug. Successful traders, generate interest. They generate other people to follow them. Trading successfully with a broker where you can withdraw your money. So brokers make their money. Don't worry about brokers making money. If we didn't, we're like any other business. Sorry, my collar looks a bit odd. It's the wrong way around. I can't put it in properly. So yes, all the best. Do what you can, mate, and tell your friends. If you're a successful trader, withdrawing thousands, millions of dollars a day, we're more than welcome to have you on board. So I hope that's answered your question. Please tell me moving average periods. Landau, let's do it again. 21, 9, 5. Okay. It's not magic. It's not, they're not absolutely numbers, but they're the ones I use. I say lots of people use others. But get onto our website, look at our webinars about all the different types of moving averages and how to use them. Good evening, Philippines. Hope you're well. I've just explained that, Lando, haven't I? And finally, can you... I asked people to give me time frames, but yes, this is it. Right. These are the last 3 I'm going to do. Last 4. What's it? 1, 2, 3. Yeah, last 3 for Harry. Okay, because you've answered my question about the time frames, and I'll have a sip of water. And these are the last ones I'm doing, guys. Okay. Some final questions over on GoToWebinar before I do that. Tabar, thanks for a good general. As a beginner, they are very helpful, but good at it many times. Yeah, absolutely. Tabar, and everybody, guys, the trading hasn't changed over it has changed technically. Lots of, spreads are much tighter, commissions are much smaller over my 30 odd years of looking at charts, but the principles of trading haven't changed, because it's people still, even though there's lots of robots involved, lots of EAs. It's a lot more technology involved than when I first started, but it is a people business. And one of my favorite books, trading books of all time, remains The Reminiscence of a Stock Operator, which is it's written 100 years ago. The story of mindset trading, the story of Jesse Livermore, and it's that is important. The mindset, trading in the zone. One of the best books written on trading psychology, written 20 odd years ago by dearly departed Mark Douglas, and the stories of successful traders that you can emulate. But they talk about lots of the things that Mark Douglas talks about in his mindset book, about having an edge, trading with the trend or against the trend, finding a way. All of the Market Wizard books always talk about that as well. So Yeah, it's very much about trading. Harry, pound yen. Let's have a look at pound yen. Sorry, you got me, not pound yen. So pound yen. Again, so let's start with the 1 hour time frame. So the 1 hour time, and that's clearly bid, isn't it, Harry? So the 1 hour's bid, 30-minute is bid, nicely trending. It's just, what can I say? I would say it's moved into the overbought area, but if you're trailing your stop loss up there, Harry, I don't know what of these time frames you're trading. If you're looking at the 3 time frames, I presume you're trading the 30-minute and looking at the faster moving 15-minute. So that's still bid. 15-minute is still bid. It's sort of running out. There's a big up candle, but is that the climactic high of the day? Probably too early to tell, but that's certainly a big up candle given what's going on. Where did it peak? Well, we peaked at 163.36. That's our next level to the upside. But again, it's been long, flat, and we've been long. But again, the 21 EMA there has kept you the right side of that trend so far today on the 15-minute for the pound yen. So pound yen bid on all those 3 time frames. Harry, next one was go back to my default settings. Pound CAD. Not pound CAD. Aussie dollar CAD. Sorry. Dollar CAD. 1 hour. Well, what's that, Harry? That's down, isn't it? Again, 21. The 21 EMA has kept you on the right side of that. What looked like a move up this morning didn't work out, didn't cross, so we're still short. Certainly closed the short out there and went short again there on a couple of hours ago with that big down candle there at 12 o'clock on the 1 hour time frame. Let me zoom that up for you. So the 1 hour is down. The 30-minute will be down as well, perhaps less so, but certainly there's a flattening out a bit more. And the 15-minute will also be down. And there we are. It's moved. It went. That would have triggered earlier. Short. Right, took you out. But again, you could have waited, get back in there, or certainly got back in there as it's gone back under 136 on the 15-minute. Time frame. You might have got out there as it's gone back over the 9 period, but certainly could have got added to it on another big candle. Remember what we say about candles. The body of the candle matters. So 2 big red candles, even on this video, took us low. It's retraced, but we're still short. So short on those 2. So pound yen is short, is long, Harry. Dollar CAD is short, and the Aussie CAD. I don't know if I've got the Aussie CAD actually. Let me find that. Aussie CAD. I've got the Australian dollar. Don't know if I have. Bonds, British pound, Aussie CAD. Find it. File. Don't know if I have the Aussie CAD here, to be honest. Aussie. I have Aussie CAD. Let's use that same template we were using a minute ago. The EMA cross. So Aussie CAD also short on the 1 hour time frame. Harry, 30-minute. Even more short. Again, see the size of the candles being significant. So moving down. Dot 90, 60. Obviously, dot 90, 50 is the next big round number for that one. Still quite a way away. 90, 50. 90 down there. But again, that's another one that's trending low there on the 15-minute, also short. 21 kept you. So you got some distinctive trends there, Harry, my friend. You got a long position for pound yen. You got short dollar CAD, and your short Aussie CAD. So obviously the Canadian dollar is in a bit of a driving seat this morning or today. Right, guys, I'm going to wrap it up because I'm way over time. It's an hour and a half. I was only going to be here an hour. But Mark, I hope I answered your answer. Automated trading app for that seems to be much advertised a viable option. Is the automated trading app facility? Be careful with automated trading systems, Mark. Learn to do this. There you go. Especially, Mark's asked a great question. I hope you don't mind me reading this out, Mark. Mark's saying, is the automated trading app facility that seems to be advertised a lot a viable option, especially for wet behind the ear traders? No, it's not. Well, it's up to you, your decision. If you're asking for my opinion, learn to do this yourself, because trading, as I've said I will say many times, and I will say it until people stop listening and tell me to go away, is really all about you, and it's about understanding your risk profile and accepting that you do lose, and taking control and learning. By buying or investing in an app or something that trades for you, you're not really learning very much. Following a trader, a copy trader, that's a little bit different. But again, you're not learning a great deal, but you can see their style. But if their style doesn't meet with your style or your time frames, perhaps you're not learning very much. But certainly, be careful. It's your money. Respect it. Look after it. Keep your losses small. Let your winning trades run. Simple as that. It's very easy to say, sat here. It's very difficult to do when you're trading. But, back yourself. This works. This trending, so you can't see it, can you? This trend following strategy works when we have a slope on the chart. When the moving averages are horizontal or not in a direction, you're in and out all the time. It's no good. You need direction. So you have a lot of losing trades as it's going sideways. But when the trend runs, it can run and run and run, like we've got here and like we've got here. Obviously, big candles can mess you about. If you're on the right side, it's great. If you're on the wrong side, it's not. But as you can see, it retraced on that one, but didn't retrace back to where it kicked off. And the short position continued. And then eventually, a few candles later, we had that big break below the big low of the big down candle. And it was a big candle that went down, wasn't it? And we continue to go down. Retraced a wee bit. We've gone down again. Is this the floor? Who knows? I don't care. I'm still on the right side of the move. We're going down. Okay. Victor's saying, Mr. What are the important things I need to consider before trading? Victor, can you afford to lose all the money you put into your account? Would it make a difference to your lifestyle? If it does, don't invest that amount of money. No, you can't. Well, be careful. Okay. So only invest the amount of money you can afford to lose. If you can't afford to lose any of it, take it back out and go back to a demo account until you get the mindset that you can cope with losing. Okay. That's the key thing. Understand the basics as well. Don't rush into trading. Understand leverage and margin and drill it down. Read it and understand, how it works. Watch the markets. Concentrate on doing one thing really well. Concentrate on one market. See its ups and downs. What's the time frame that best suits your personality? That's the key thing. Many people trade the wrong time frame, trade the wrong asset. Not necessarily the wrong asset, but they're trading the wrong time frame. Anyway, I'm going to go because my voice is about to give up completely. I've been here an hour and 40. I hope that was useful, everybody. Let me just finish with some of the slides. Tomorrow, where am I? Here we are. Tomorrow, Andrew's going to do part 2 of the webinar she did. Oops, you can't see me. Can't see them, sorry. Andrew's going to do part 2 of the Premium Trader Tools package. We have lots of trading tools, software tools available on the website. The Premium Trader Tools package is packed with different types of bits of it that you can use. So part 2 tomorrow with Andrea. The Commitment of Traders report next Tuesday with Andrea. The Commitment of Traders is key. If you haven't heard of it before, join Andrea to find out why it's important, who uses it, and how traders and investors can benefit from it. Live analysis every Wednesday, as usual. So there we go, 12th and the 5th. Heikanashi next Thursday. The 11th, I'm going to do something called How to Improve Your Trading Mindset. This is all about what I've just been saying to Victor about risk management and money management. It's probably the most important webinar I do because that's the soft skills are the most important things. Fibonacci with Otto, correlation, the Doshian channel, and scalping strategies. Many people, again, get attracted to scalping on the assumption that it seems quick and easy and or quick and therefore easy. It's not. Again, if it doesn't fit your personality, be careful. So there we go. Lots of webinars, lots of live stuff, lots of videos, ebooks, we're here to help, my friends. So take care, stay safe, and we will see you all again tomorrow. Contact us at webinars@hfm.com, and stay safe, everyone. All the best. Bye-bye.